Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the top 10 best innovative stocks to buy right now. These stocks are going to be phenomenal buying opportunities, especially if you are a long-term investor who wants amazing growth, and if you also want to stabilize your portfolio in regards to a potential stock market crash or recession. These are the companies to do it with. So for more videos just like this one on the best stocks to buy right now, go and annihilate that like button right now, smash it until it absolutely breaks, subscribe if you are new for more videos just like this one, comment down below which of these companies you personally own in your portfolio, and without further ado, let's jump right into today's stories. We're first going to start off with Etsy, which trades for $105 per share. However, experts believe this company could surge up to $186 by the end of the year. Etsy has been growing very nicely, and they specialize in people making crafts and other handmade products. However, they also have opened themselves up to a more mainstream e-commerce position, meaning that Etsy is building itself up to be sort of a niche type of Amazon. Etsy has absolutely skyrocketed in their growth by returning more than twice the growth rate of the overall e-commerce market, which is absolutely phenomenal. The growth of Etsy has been extremely impressive across all of its categories, and this growth still continues today. Etsy's marketplace sales have literally increased by a volume of around 144%, and honestly, few e-commerce companies could go head-to-head with the market leader, which is Amazon, and survive. But not only has Etsy survived, they are thriving right now, and technically it's still Etsy's early days in the market, meaning that they have excellent long-term growth potential. Etsy's overall market opportunity is in the hundreds of billions of dollars, which means they still have a lot of upside opportunity considering that they brought in around $13 billion worth of sales in the prior year. This tells us as investors that this company is just scratching the surface, so now may be an excellent time for patient long-term investors to take a small position in this overall growth company. Next up, we have Pinterest, which currently trades for just $26 on the low end, but professionals believe this company could skyrocket up to $39 over the next 12 months. So let's discuss why this is. Pinterest essentially is a social media company, and multiple people like Pinterest because instead of focusing on people, Pinterest is more concerned about posting things. Whether or not it's giving you inspiration for redecorating your room, your house, your car, making a birthday cake, updating your wardrobe, or anything else, Pinterest gives people visual inspiration so they can get things done. Pinterest has been an absolutely phenomenal social media company over the last few years, and despite recent declines in their stock price, their recent growth trajectory is extremely positive. As of right now, Pinterest has a massive growth opportunity, especially when it comes to monetizing their overall user base, which they are just scratching the surface in. It could take a while for the company to truly realize and utilize properly their e-commerce potential, but over the long term, investors could be set to anticipate a very handsome reward for this overall company. The monetization potential of Pinterest's overall users is massive, especially when it comes to international exposure, which currently accounts for 80% of their overall user base, which are international users. However, these only represent a tiny fraction of their overall revenue. So once they can utilize their overall users and monetize them effectively, this will cause the share price to skyrocket. Up next, we have Realty Income, which currently trades for the cheap price of just $61, while analysts in this particular field and space believe the company is undervalued right now, and they believe it should be worth around $74. Although this is not necessarily much growth, jumping from $61 to $74, they do offer a very good dividend yield, and this is one of the companies on this list that is going to provide your portfolio with stability even during a stock market crash or a recession. There's a real case to be made here regarding Realty Income because they are a value company, a growth company, and an income company, meaning that they have phenomenal value, so you're getting an amazing deal when you invest into this company. They have great upside growth potential, and they are giving you passive income in the form of a dividend. So what's not to like about this company? This company is extremely well-rounded, and for long-term investors who want passive income and stability for their portfolio, this is one of the best buying opportunities on the market right now. Realty Income is a real estate investment trust, also known as a REIT, and they primarily invest in freestanding single-tenant rental properties. Some of their tenants would be major companies such as Walgreens, Dollar General, FedEx, and many others. Realty Income also owns more than 11,700 properties across the United States as well as Europe, and the company has been doing phenomenal ever since 1994, since they were listed. Realty Income has produced an annualized return on average for their CAGR of around 14.6%, which is very impressively outperforming the S&P 500 index, which is a stock market benchmark. To put this into perspective, the S&P 500 normally returns anywhere between 7 to 12%, depending if we are incorporating inflation and what averages we are using regarding time periods. Nonetheless, it seems that Realty Income has outperformed this stock market benchmark, which is mind-blowing. The company has also paid out their dividend for more than 600 consecutive monthly dividends in a row, to where currently their dividend yield is around 4.84, which corresponds to their current share price of around $61. On top of that, the company has increased their payout of their passive income dividend 102 quarters in a row. So not only are you getting phenomenal value from this company because it's cheap and it's trading at very low accounting ratios, plus you're getting growth from the overall undervalued share price because it could be worth or should be worth around $74, and you're getting a passive income, but on top of that, the passive income is increasing as time goes on. So their dividend yield is literally increasing, giving you more passive income on top of growth paired with amazing value. So overall, this is a very valuable stock to have in your portfolio, and it makes your overall portfolio more resilient to stock market crashes and recessions. Up next, we have Block, which currently trades for $73, and this is a lower end share price, while on the higher end, many experts believe this company should be worth $163. Block used to be known as Square, and they are a niche payment processing hardware company which has an absolutely expansive financial ecosystem for both merchants and individuals. Block has processed around $186 billion worth of payment volume over the last year. However, Block is much more than just a payment processing hardware company because they also have the Cash App, which allows users to send money from person to person, make direct deposits, and it also gives people the ability to buy and sell stocks as well as cryptocurrencies such as Bitcoin. Block has also acquired a music app named Tidal, as well as the Afterpay Buy Now Pay Later platform, which is currently starting to reflect very positively in their overall financial results. Now, still, Block has a long way to go, but the growth potential for this company is absolutely phenomenal, meaning that you should always make sure to do your own research, or at minimum, put this company on a watch list. I'm very excited for this company overall. Next up, we have Shopify, which trades for a relatively cheap price of just $44, although professionals in this space believe the company should be worth $81. Shopify essentially acts as a one-stop shop, and it enables e-commerce access to multiple small businesses and large businesses alike, to where their e-commerce platform literally has the most sales going through it than any other e-commerce platform besides, of course, Amazon, which is currently a market leader. The platform has generated around $5.6 billion worth of revenue over the past year. However, this is just a fraction of their overall estimated market that they could further infiltrate, which currently comes in at around $153 billion, and this market is still growing. E-commerce is still in its early growth stages, and it only makes up around 15% of the retail sales in the United States, and with Shopify being the number 2 company for retail sales in the United States, this company has loads of further upside. Now, it's not all rainbows and sunshine, because due to fears of a stock market crash, bank runs, and recessions, there has been signs of a slowdown in e-commerce spending. So Shopify clearly is going to get hit by this, along with a few others on this list, but over the long term, it seems that Shopify is one of the best stocks to buy right now in 2023, and even if their share price goes lower, it just makes it a better buying opportunity for long-term investors. Up next, we have one of my favorite stocks on this list, which is Mercado Libre, ticker symbol MELI, and they currently trade for $1,200, even though analysts, after analyzing this company, believe this company is undervalued right now because it should be trading close to $1,750 per share, which is amazing. Mercado Libre, you can think of them as the e-commerce version of Amazon over in Latin America. And considering that Brazil and Argentina are some of the most populous nations in that particular region, Mercado Libre has phenomenal growth potential. This company also has multiple different segments. For instance, they offer logistics services. Clearly, they have an e-commerce platform as well as a lending business. So let's put this into perspective, and here's why I love the company. Not only are they targeting a very rapidly growing economy and market, such as in Brazil and Argentina, but essentially this company is the combination of companies such as Amazon, PayPal, Block, and Shopify. So if we could combine all of these companies, we would get a company such as Mercado Libre. Now, if their current share price is scaring you a little bit, don't worry. Make sure that your brokerage offers fractional investing or fractional shares or share slices, meaning that you don't have to spend $1,200 on a single share. You could buy the share fractionally, so you could buy 1/10 of a share for $120 or even 1/100th of a share for $12. So be sure to check that if your brokerage account offers fractional shares or share slices. Overall, I am very excited about the future benefits of this company, and I currently hold this in my portfolio along with a plethora of the other companies on this list. Next up, we have another extremely innovative company, and that's Intuitive Surgical, which offers robot-assisted surgeries. Right now, the company's stock price is $237 per share, but many people just believe this company is undervalued because it should be trading at well over $300, closely pertaining to $325. The company has offered their Da Vinci surgical system, which is a clear market leader in their respected space. The company is absolutely dominant with a market share of over 80% worldwide, meaning that this company has somewhat of a monopoly over this particular space. This has allowed this company to achieve very great growth catalysts as robot-assisted surgery continues to be accepted worldwide, leading to an excellent business model and growth that we can count on over the next few decades. Up next, we have Disney, which currently trades for $93 per share. But again, this is another undervalued company because according to their future financial metrics, this company should be trading close to $145. This company offers everything from theme park experiences, movies, streaming services, apparel, toys, and so much more. Right now, let's talk about their streaming service, which is Disney Plus. And currently it has 160 million subscribers, which they achieved in less than 4 years after launching. However, their 5-year goal originally only called for around 60 to 90 million subscribers. So they have annihilated that overall projection, which is extremely good news for the company. In 2023, we've also seen the demand for Disney's theme parks and movies start to skyrocket despite inflation. Talking more about their streaming services, they are laser focused on profitability to where their Disney Plus platform, their Hulu platform, and their ESPN Plus platform end up turning profitable. So it's a no-brainer to buy this company and add it to your portfolio for long-term gains. Disney overall has amazing intellectual property regarding the Marvel Cinematic Universe, Star Wars, ESPN for sports, Pixar, and Disney, and many other things. So the profit potential of this company is actually staggering, and I think investors should take a deeper look at this overall company. In the number 9 spot, we have Berkshire Hathaway, which again is one of my favorite stocks on this list. While most of this list is made up of growth stocks, this is more of a value company that we would want to buy because again, it's going to add that stability to our portfolio even if a stock market crash happens in 2023 or if we enter into a recession in 2023. Right now, Berkshire Hathaway, ticker symbol BRK.B shares trade for $293. Considering that professionals believe it should be worth around $371, this is a phenomenal buying opportunity. If you're not familiar with this company, Berkshire Hathaway is a holding company that currently owns a collection of around 60 subsidiary businesses, including household names such as Geico for insurance, Duracell batteries, Dairy Queen, and on top of that, the company has very large stakes in Apple, Bank of America, Chevron, American Express, and Coca-Cola. These companies are also fantastic investments in their own right, but why not buy Berkshire Hathaway, who owns large stakes in these companies as well? Most of these companies were handpicked by Warren Buffett, who is a legendary investor who currently is 92 years old. Berkshire Hathaway has continued to beat the returns of the S&P 500 very similarly to Realty Income, and there's no reason to believe that Berkshire Hathaway BRKB shares won't continuously outpace the S&P 500 stock market index over the next decade. And every time you beat a stock market benchmark such as the S&P 500, that is extremely difficult to do over the long term. But I do want to warn investors that Warren Buffett isn't going to be around forever. He's already very old, and once he passes, this could negatively impact the share price. So there is some risk here, but overall, I really like Berkshire Hathaway. Lastly, we have, of course, the big kahuna, Amazon, which currently trades for $98. Clearly, it's undervalued. It should skyrocket up to $160 over the next 12 months, and the company is the market leader over in the United States regarding the e-commerce market. With about $500 billion in gross merchandise sales last year, on top of the Amazon Web Services cloud platform, this company is primed for future growth. Another one of my favorite stocks on this overall list. Amazon still has phenomenal growth opportunity, their trajectory is amazing, and they are maximizing their overall e-commerce adoption. Because again, remember, e-commerce only accounts for around 15% of the United States retail sales, meaning that there is still plenty of upside. Amazon right now is trying to target a market which is worth $1.6 trillion, and that would just be their cloud industry. That's not even including their e-commerce industry. Amazon is not only a market leader in e-commerce, but also in their cloud platform. They are the market leader in two gigantic trillion-dollar spaces. At the end, I think that some of the best companies to buy on this list for me personally would be Realty Income, Berkshire Hathaway, Mercado Libre, Amazon, as well as the S&P 500, so feel free to invest into ETF ticker symbol VOO. With that being said, I would love to hear your thoughts down below about what your favorite stock is on this list. Subscribe if you are new, smash that like button if you made it all the way to the end of the video, and I will see you in the next YT video.